Welcome back. Now, in recent years, a number of soft commodities hit multi-year highs due to extreme weather conditions, production shortfalls, and inflationary pressures, driving up costs. And joining me now as we map out the kind of performance that's expected from that market moving forward is Forex trader at RMB, Quintin Claassen. Quintin, thanks so much for joining us today. Now, before we get into the dynamics that are playing out right now, let's just recap on soft commodities performance over the past year. We initially did see an uptick about 2 years ago when the Ukraine war hit. Those risks kind of subsided, but a theme around rising climate risks also driving up prices. Just take us through your analysis of what's been playing out in the past year.
Yeah, thank you very much for having me. I actually like that you brought in, what's happened over the past 2 or 3 years, because I think it's useful to sort of use that as a base from where we are currently in the South African season. So the past, say, at least 4 years have been some of the best years for growing in South Africa. That's because of two factors. One, because of advantageous weather conditions, what we call a La Nina growing season in South Africa, coupled with high grains prices overseas because of the Ukraine war and etc., as you alluded to. So what that's meant is it's put farmers in quite a beneficial position coming into the season and the country as a whole, because we had a large opening stock with which we entered into the season. Another thing to note is that there was also good soil moisture content coming off of the back of good weather. Then as the season evolved, we saw decent rain up till around mid-January, and then the rain sort of stopped, and we shifted completely into an El Nino season, which had been, forecast with some varying degrees of probability before then, but it's the way that it hit and how prolonged the period of no rain was caught a lot of people by surprise. So what that has meant is that our crop estimate committee has revised the size of our crop size down twice throughout the season, and we will be producing less maize and oilseeds this season as compared to what was originally forecast.
Let's talk about those weather conditions. On a global front, I read an article that said forecasters estimate an 85% chance that El Nino will end the tropical Pacific, or rather will end, and the tropical Pacific will transition to neutral conditions by April, June, and that the La Nina conditions will develop by June, August. How does this affect the market, and will we see other agri-commodities fare better than the others?
Yeah, so I mean that's 100% right. On the good news side of things, it does seem like we are exiting this El Nino period, relatively soon. I think it's also useful to keep in mind what El Nino and La Nina means globally. So typically, an El Nino season will be more beneficial to northern hemisphere growing regions and some parts of South America, where La Nina will be beneficial to Southern Africa, and the converses to those respectively as well. So what that does mean, if we're now shifting into a what's forecast likely La Nina period as we reach the end of our growing season now, I mean that's great news as we will enter into a new planting season, later on in the year when you need that soil moisture content and that wet, those wetter conditions for plantings. Maybe just one other thing I'd also note is conditions not just in South Africa but Southern Africa. South Africa we in a season of El Nino here, but parts a bit north of South Africa have this is sort of their second season of exacerbated growing conditions. Your Zimbabwe's, your Zambia's, that we've seen those increased import numbers from them. Yeah.
As you bring in Africa, I want us to zoom in on cocoa, right? Those prices soaring to record highs as they've been supply disruptions. I mean, I was quite disappointed when I read headlines around Easter time that chocolate prices have increased. So are we going to see some sort of relief in that market anytime soon?
Yeah, so it's interesting now when something like cocoa starts to catch the headlines when the price does rally like this. But if you speak to people in the cocoa industry, they'll sort of tell you it's a long time coming. It's not just a one season like event. It's almost the perfect storm of bad weather, disease-ridden crops, and tricky management with government regulations, and getting supplies into the EU. I know that you talk about things like sustainable cocoa farming, where you can't use deforestation to increase the size of your cocoa crop. But then if you have aging trees which are subject to disease, then that immediately restricts the supply. And then then you have knock-on supply chain effects that end up making headlines for increase in the cocoa price. What I will say is I don't think it's as temporary as what people originally thought. It's if you based on what you read and the price action that you see, it is a fundamental rebasing of the cocoa market because of the fundamental market factors which are at play.
It'll be interesting to see how that actually plays out. We've seen those West African nations really struggling with production issues on that end. Now, we have those supply issues, those production issues, as well as the changing weather conditions on the back of climate change risks, really changing the dynamics, playing out in the soft commodity scene, right? With that being said, what is your outlook for these commodities and the prices as we move into 2024, rather the second quarter of 2024?
Yeah, so I think a very useful model to use is one of export and import parity, especially for the local South African market. With the run up in prices which you have seen in the local market because of those weather concerns, run up in prices because of a smaller crop size, decrease in supply, you start to reach a level that people who participate in the market called import parity. What that means is it's a rough price level at which it makes more economic sense to start importing crops as opposed to sourcing them locally. And that's a level that we're getting very near to with regard to yellow maize. And I think then it's also important to draw a distinction there between yellow maize and white maize. Yellow maize is very substitutable and is grown in a lot of places around the world, in Brazil, Argentina, America, where we are one of the biggest producers of white maize in the world, and that becomes a lot harder to source. So when you're talking about resistance in upward price moves, yellow maize is a crop which will see that a lot sooner than a white maize will, just because of the intricacies in sourcing a crop like that, and we have started to see that in our local South African market as well. We've seen imports being booked in Cape Town. We've seen also Zimbabwe, looking at importing maize from Brazil as well, like alternative sources of supply. So I think going forward, the story is ultimately, crop certainty in South Africa. How big is the crop, and for that we'll look to the crop estimate committee, and then also what we call the South African balance sheet. How much maize did we come into the season with? How much are we going to produce, and how much are we going to consume? And that ultimately is going to drive the price, and that's supply and demand balance sheet gets released by the National Agricultural Marketing Council. And so those are sort of the two committees that we look to for guidance on these sorts of things. But yeah, I guess the main thing going forward is just weather and just being data dependent.
Definitely. Quintin, thanks so much for joining us and just updating us on the soft commodities market. That was Forex trader at RMB, Quintin Claassen.